Now, the next thing is, though, we're transitioning from trade uncertainty to domestic political uncertainty with the election. And historically, you've seen lower business spending during election years as businesses sort of hold back. And right now, you have a big divide between the two parties in terms of how they see taxes and in the future. So we have trade uncertainty going to domestic.
And you got articles of impeachment sitting on the speaker's desk,
right,
collecting dust.
All of this does not bode well.
And an election. It's the first time a guy has been impeached during his first term, or guy or gal, and, well, actually guy, but someday maybe gal. It's just bizarre. I guess the constitutional crisis, the market has kind of looked past it. Will that change January 1st, do you think?
I think the market's probably seeing political gridlock at the moment, and the Fed on the sidelines with still a dovish bias, and in a low inflationary environment, with the Fed not concerned about inflation and still having a dovish bias and this political gridlock, that's probably a good setup for markets, actually.
You think that inflation will become a story this year?
No.
You don't?
No. Not for a while. In fact, we see the Fed below target inflation for the next 2 years, 2 to 3 years, and see them actually cutting rates in 2021 in order to boost inflation.
Could we see a little bit of inflation across the Atlantic and therefore see the dollar weaken, relatively speaking, in the year ahead?
Dollar's been weakening a little bit. I think we don't have that much movement in the dollar, given that central banks are kind of all have done their policy and they're on the sidelines now. I think the interesting thing is the Fed's policy review this year is probably going to be one of the major themes that we're going to be talking about for the next 6 months. And that's going to take them probably in a dovish direction towards some form of average inflation targeting. And how they go about achieving that, whether they cut rates to prove it or whether they go for something like an opportunistic reflation, they don't hike into stronger inflation, is really going to be important for markets to develop.
Okay, Gabriel, was that your Rumsfeld quote that I saw? You worry about unknowns, but it's the unknowns that are the ones to worry about, or whose quote was that?
Yeah, that was mine.
That was yours, because I read the entire show before.
That was Donald Rumsfeld quote, but in this context, it was mine.
In this context, it was yours, but it sounds like a Yogi Berra. That unknowns are something to be concerned about, especially the unknown unknowns.
Absolutely, yeah.
But that is true. We have what is it in 2020 that no one's talking about that could derail this entire, because everybody's feeling pretty good after this last year in terms of the economy and in terms of the markets?
Well, historically, every time you have an environment where there is a lot of optimism or even complacency and you actually don't see a lot of obstacles down the road and people are feeling pretty quiet, guess what? Tendentially, bad things every once in a while happen, or at least some volatility.
Any idea what
yes, I mean, I would say one of the probably more worrying scenario would be some kind of radical outcome in the midterm election, which seems unlikely right now, but you never know. And
well, it's not the midterm; it's the presidential.
Yes.
Election, yeah.
Yes.
And,
yes. I mean,
and you're talking about at the national level. You're talking about the presidential.
Yes.
Yeah.
I would say it's unlikely right now, but you can have some unexpected circumstances that may lead to an extreme outcome in those elections, and that could totally, not only that happening, but also the perception of the possibility that can happen can probably derail the market a little bit. And that would be one slightly unknown.
I've seen this in previous elections where, different people rise, then you take a really good look at them, and then they fall, and then there's a rebound of someone else, and they rise. I mean, I remember John Kerry wasn't going to get it, and then he finally got it. I've just seen this before. And Warren was up. She's sort of down and out. Biden up and down. He's back up at Bernie. Suddenly, I keep reading these articles. Don't count Bernie out. And it could actually happen. I mean, that would be an outlier. He couldn't get elected president. I don't think he could.
That it could happen may have a consequence, even though at the end of the day, maybe it doesn't
happen. By November,
it
doesn't happen.
It may jolt the market. Just if people start understanding that's a real possibility, right now they're discounting as an almost non-possibility. But if something happens and perception change, that in itself, even before the outcome, can have an effect.
And trade, you're not concerned about, even if the deal doesn't necessarily come through, you think the market's always been too focused on that?
Personally, I'm not. I think people are getting a sense after so many false alarms that at the end of the day, the percentage of GDP that is under threat, especially short-term here, is for the United States relatively modest. And therefore, there is no deep macroeconomic reason why that should have a very strong impact, in my opinion. And I had this feeling all along, and I think a lot of people, given all the false alarms, kind of got a similar idea, so I wouldn't worry about that too much.